The world's economy in doom. Latest economy breakdown. The global economy is still facing significant challenges, including the Russian invasion of Ukraine, a cost of living crisis caused by persistent and broadening inflationary pressures, and China's slowdown. Our global growth forecast for this year remains unchanged at 3.2%, while our forecast for next year has been reduced to 2.7%, 0.2 percentage points lower than in July. The slowdown in 2023 will be widespread, with countries accounting for roughly one-third of the global economy expected to contract this year or next. The world's three largest economies, the United States, China, and the Eurozone, will remain stalled. Overall, the shocks of this year will reopen economic wounds that were only partially healed following the pandemic. In short, the worst is yet to come, and many people are terrified. Living cost crisis. Increasing price pressures, which squeeze real incomes and undermine macroeconomic stability, remain the most immediate threat to current and future prosperity. Central banks are now laser-focused on restoring price stability, and the rate of tightening has picked up significantly. There is a risk of binding and over-tightening. Under-tightening would exacerbate inflation, erode central banks' credibility, and destabilize inflation expectations. As history has shown, doing so would only raise the overall cost of bringing inflation under control. The consequences of a strong dollar. The strength of the dollar is a major challenge for many emerging markets. The dollar is now at its highest level since the early 2000s, though the gains are most pronounced against advanced economy currencies. So far, fundamental forces such as tightening U.S. monetary policy and the energy crisis appear to be driving the rise. Should financial market turmoil erupt, driving investors to safe assets, global financial conditions could worsen and the dollar strengthens further. This would exacerbate inflationary pressures and financial fragilities in the rest of the world, particularly in emerging markets and developing economies. Inflation could become more persistent, particularly if labor markets remain extremely tight. Finally, the conflict in Ukraine continues, and further escalation could exacerbate the energy crisis. Fiscal policy can assist economies in adapting to a more volatile environment by investing in productive capacities, such as human capital, digitization, green energy, and supply chain diversification. By expanding these, economies can become more resilient to future crises. Unfortunately, these critical principles are not always guiding policy at the moment. Thank you. This is Caddy Creatives. Please like and subscribe. Click the notification bell to get updated when we drop a new video on this channel.